Hi, investors. The market has been in a downtrend from a couple of days, and this has instilled fear in the hearts of retail investors. So we thought a video format would better suit to explain this content, and we're just taking a stab at it, without any script. So pardon us for video or audio quality. So that being said, let's jump into the learning session for today. So typically what we're gonna cover is right from the basics. So where the market is currently trading, and what are typical patterns and historically how it has been, and what to do in such correction modes, when to invest. So we're gonna dig deep into all these topics and try to get some learning out of it, right? So yeah, so what you see here is a Nifty weekly price chart. And so these particular candles represent the price action of the week. So just to explain you about the candle, right? So just taking example of this particular candle, and on the top left, what you see there is something known as OHLC, right? So the O refers to opening, that is market opens at 9:15 a.m. and the price at 9:15 a.m. is what we see there. So it is 20,749, and during the course of week, so market made a high of 21,132 and a low of 20,687, and finally settled at 20,097. And whenever we write a daily close or weekly close in our write-ups, right? So this is what we mean, and it is important because this is the price where they say traders have settled upon. And this kind of becomes important, when we are assessing breakouts, because that is when, the momentum kicks in, one side gets butchered. I mean, either your buyers or sellers, they get butchered, and that is when the real trend emerges in the direction of the winners. So yeah, that is the reason why a close is important. Okay, so that being said, then deep diving into the structure and the historical price action of Nifty. So let me switch to a different candlestick pattern. What you see here is a normal candlestick, but for today's session, I'm going to leverage a different candlestick called Heikinashi candles, or commonly known as Japanese candlesticks. So what these do is that they clear out the noise in the candle. So here you see clean uptrend, clean green bars, and then your red bar. So this is one of the advantage of Heikinashi, just to put it in one point. So it takes the average price of the day. So that is how you see such clean trend here, right? So yeah, so this is what we're gonna see. And one of the easiest way to trade using Heikinashi is wait out for a fat green bar here, and enter here and exit when a red candle comes. So his when you look at historicals of past behavior, it kind of looks very simple, but in reality, when you try to execute this, it becomes very tough. So the psychological aspects would play a role here, and it is not easy to execute it in reality. So that is when you take help of multiple other indicators or asset classes to try to find that correlation and build up that confidence to invest, right? So as part of the same below here, you see an indicator known as MACD, right? This is a famous indicator, discovered way long back by one of the American scientists. So what does it tell you? So this is a convergence. The expansion of MACD is moving average, convergence, and divergence. So it takes the convergence and the divergence between your 12 days or weeks moving average and 26 days moving average. So just to put it in simple words, so you see a black line and a green line. So whenever the black line crosses, your red line from bottom, that is when you enter, and whenever it crosses from top, that is when you exit. And again, it's not so simple. And trying to correlate both the Heikinashi and the MACD here. So the setups look something like this, right? You wait out for a green bar and check what is the condition of the MACD here. So still, hasn't given a crossover. But what you see here is that the shade of the histogram has changed from darkish red to some lighter shade of red. So this is telling you that, the momentum on the downside is getting slowed down, and maybe a trend in the opposite direction would emerge. So what we would suggest is to invest 25% of the total amount you decided to invest in that particular stock, and wait for a crossover in MACD. So whenever you see a crossover, and you see continuation in Heikinashi with green bars, that is when you put 100% of your amount, and you trail all the way till here. You see, when you till the time you see a red bar. So that is how you would capture this trend, right? So this is one of the simple strategy which we can use to invest in the market. Again, let's go back and also see where we are currently, and how does market cycles appear, and how can you take the most advantage of them, right? So let me go to a monthly time frame and go back to COVID period. You see, so this was the period when we bottomed out. So this was the large bottom of the trend which started after the financial crisis. So this was once large cycle, and then we bottomed out with COVID, and we hit a level of 7,500 in Nifty, and from there. And the chart you see here is the Nifty future chart. So obviously there would be a difference, but I'm leveraging this for today's video because the trend is kind of clear here. Both are same, but yeah, today we are going with the Nifty future chart. So this is the area where the Nifty bottomed, and from there started the mega bull run. You see, right, just to measure the size of it from the bottom to the top. So it was 100% gain in index. So just think about normal stocks, right? They would easily grow by 200 or the 300%, 2x or 3x candidates in all the stocks. So this is a nature of bull market, and it's not so surprising because the same thing happened over here. So that is how bull markets function. And then what happened was we kind of topped out in October 21, then started this large consolidation. And just to put it in a, we can close this in a rectangle. So these are the areas where either the FIS or DIS, the big players, have made good profit, and they are ready to dump their stocks to poor retail investors. So just, I think this would be a good example to explain about the way the big players function, and how the psychology of retail investors function, right? So the area you see here, right, that is when the histogram has turned into lightest red, and you get a crossover. So this is the value zone. So this is the area where your FIS or DIS enter, and typically what happens here is that retail investors are kind of frightened looking at this large fall before, and the anchor bias kicks in, and they would be like, stock market is not the place for them, and it is not the right time to invest, and the panic would not allow them to put their money in the market. And then slowly market starts going up. They see 50-60% return. Then enters the retail investor with bit of understanding about the technicals or the fundamentals. So they see that there is a breakout here, and the trend has been clear, and they enter somewhere here. What happens is, post that, they see 20 to 30% gains, and this phase is called the FOMO phase, where small players, they really get FOMOed out. They will be like, we missed out a massive rally. Let's not do that mistake, and they park their little savings into this, and that is when the big whales they just throw their stuff at retail investors, and the retail investors get trapped in this massive consolidation, and ultimately they would end up in losses. So this is how the market functions, and the idea behind educating the group is that we enter here but not here. So that is where we leverage the fundamental study and also the technical study to identify those value zones area. We don't invest in stocks which have run up 20 to 30%, but try to find those value stocks. They would take some time initially. Even in Nifty, you see here it has taken months But let's say if you had have invested somewhere here, the upside would have been great, right? So that is a whole idea behind investing at that value zone and also in growth stocks. And so yeah, again linking it back to MACD. So you see here, right? So there was a clean uptrend, and then the MACD, the black line crossed over the red line, and here started the consolidation phase, and it lasted till your December 2023 according to monthly chart, and here is where you started that fresh uptrend. And going back to the weekly time frame, so although you see that the cycle kind of bottomed out here, but based on few other correlation studies correlating it with other asset classes and indices, what we see is that the technical bottom in Nifty occurred on 27th of March. So this is the area where the indexes actually bottom. If you go back and look at many stocks, so this was the area where they bottomed out, and we started a fresh uptrend from here. And now let me explain about the market cycles and how they function. Right? So market typically moves in stages, and what studies have revealed that there would be five stages before it completes a cycle. And just to give you, so this was stage one, stage two, and this was a larger stage three, and a stage four, and this was stage five, and then we got this good correction or consolidation. So just applying the same thing here. So this was our wave one or stage one, and then we had a correction here, and then we started the stage three, and this is where we're again consolidating. Now the question here is, did we end stage three, or is it stage one of the massive stage three? Because again, going back to the theory, generally stage threes are the largest waves in a pattern. They're so large that you make most amount of money during that phase. And just to measure, the size of it, normally what the theory says is that your wave threes are at least equal to wave one. And in most of the cases, it would be 1.618 times of your wave one. So what level are we looking at? So equality, we have already touched it and we are consolidating. And 1.618 is somewhere close to 24,448. Let's not discuss about this, but at least going by equality, we have already hit it. And will be little conservative, think that this is stage three has ended here, and currently we are in stage four. And just look at this pattern, right? It is beautifully consolidating in this particular rectangle. So the prices have not gone anywhere. So it kind of started in January 2024, and till now we are in this particular consolidation zone. So that is why you don't see your portfolios jumping 10 to 20%. So this is the time when you need to be patient and try to identify those growth or momentum stocks and put in money and sit tight, so that something like this would come post this consolidation breaks, and you will see your portfolio swelling up, right? So yeah, that is where we are, and even correlating it with the MACD. So here was the buy signal. You went all the way up, then was a correction, then again a clean signal. Now we are in the consolidation zone. So what would you do now? So again, taking the same example, you wait for a good fat green candle, and then the momentum to. So what do you do now? So you wait out for a fat green bar here, and also the MACD to give a buy signal, and that is when you enter. Or one of the simplest way is wait for the candle to break out this consolidation zone, and then it would start the next leg up, right? And what would be the size of it? Let's do a simple measure of that, right? So your wave three was equal to wave one in most of those cases. Your wave five would also be equal or be 0.618 times of your wave three, right? So if it is equal, we are talking about 25,000-ish levels, and if it is 0.618, we are talking about 23,943, right? That is what we have been writing about, that Nifty should at least hit 23,500 by June. And there are many fundamental triggers for that to happen. One is your anticipated rate cut, then is the massive win of the NDA government, and then the budget. So all these would be those fundamental triggers, and never go by pure technicals. Always try to correlate it with some fundamental study. So yeah, that is where we are on Nifty. Don't get panicked by 1 or 2 days of correction. Ultimately, you're gonna see that way up. And also, one interesting thing to observe here is you see this black moving average, right? So this is one of the one kind of moving average which we're gonna talk later someday. And you see how beautifully the market has been respecting this. It's taking kind of support here, not breaking it. And let's see if it goes up from here, right? That would be a beautiful setup from here. Now, so yeah, so that is on Nifty. So we thought we'll take some time and analyze our recommendations given so far and where we are currently and what is the future scope of it, right? Yeah. So starting out with Steel Authority of India and then checking the cycles here. So you see I'll take a 3-month chart just to explain about the historical and how does the metals function. So we have been writing that this is we are in a massive metal upcycle, and this is going to be a 5 to 8 years of 8 years play, and encourage everyone to be invested in some or the other metal stock. The reason behind is that so we are in 2003 to 2008 kind of bull market, and why do we say so? Because what happened here was on the fundamental side, there was a great push by the government on the infrastructure. There was private capex, and that is when industries like your PSUs or power or your solar, etc., they uh, pump up, and your regular sectors like your IT, financials. So they don't do well. Example, FMCG doesn't do well during this cycle. When I mean doesn't do well, it is a relative comparison, right? Your PSUs would do way better than your FMCG or your IT stocks. So that is why I would encourage to find those cap goods or metal stocks and try to get invested at good value zones. So yeah, so what happened here? So again, going back and applying the same wave principle. So this was wave one, wave two, wave three, wave four, and this was massive wave five. And then we started the bearish, consolidation. So what happened here was sale went from all the way to 2.5 rupees to close to 200 rupees. So that was 100x in sale. And then from there, we corrected all the way till 15. So this is how, bull markets are. And this is the cycle which we are in, and expect the same to repeat here. It might not be 100x, even at 20x or 30x. Just imagine where the level would be, right? So again, coming back to the current level, so we bottomed out here. This was our current wave one and wave two, and now we started a fresh wave three, and even your MACD has given that positive breakout, right? And going back to a lower time frame here on the weekly, so yeah, so this was a COVID bottom, wave one and wave two. We bottomed out here and we started a fresh upcycle, and now we are at wave two. So just to measure the size of wave three and where it would land up, right? So taking out this and putting it here. So equality is pointing us towards 622 and 1.618 is somewhere to then let's not even talk about this, right? Even 622 sitting at 160 would make us look stupid. But that is how market functions, and the technical studies are pointing us to these levels. It might it will definitely not occur in a day or a month or a year. It might take few years, but ultimately this is the trajectory which the stock is going to follow. And always try to link it with fundamentals. So again, what happened and what was the reason for this massive trigger and this consolidation, right? So as pointed out earlier, so there was a great infra push or the capex push, and because of that, the bull run has continued here. And metals always follow the China cycle. If China does well, then metals would do well, because China is the manufacturing hub of the world, and they require steel for manufacturing goods. And if their economy does well, then the metal prices are always high. So China has been, consolidating during this phase. It was not performing better, driven by your real estate crisis and also the government policies, etc. But lately, we see that the China economy rebounding back, especially on the stock market side. If I go back and check the Hang Seng or the Hong Kong index, we see a few patterns which are pointing towards a revival in the bull market, right? So that is good, and that would help the metal prices to increase, and then obviously the revenue for metal manufacturers would rise, right? And that coupled with domestic demand would aid sale. So that is the reason behind our conviction on sale, and we think this should be a good bet. So that is on sale, and then moving ahead with Petronet again, not spending much of the time and just analyzing the targets and where we are. So this was wave one, and wave two. Petronet didn't do anything during the COVID period, driven by your wars, your LNG prices, and internal capex issues and all. But now everything looks sorted, and we completed wave one here and wave two here, and equality should take us to 408, and 1.618 is all the way around 542 is what we see from here. And then is Gujarat Gas. So this is an interesting stock because if I go to a monthly chart here, so we started the upward cycle in Gujarat Gas in Feb of 2019, and it was a long bull market, and then started the consolidation phase. Even MACD has given a clean trend and up cycle, down cycle. We completed a one market cycle, and then we are starting the fresh one. We are in the nascent stages of this particular bull market, and what you see here is something known as a W pattern or a double bottom pattern. And typically, what happens is that the price reaches all the way up to the top. So 772 is something given, and but we expect more than that, right? So the wave ended here. So this was the wave one, and just taking a closer look at it by switching to weekly charts. So this was wave one. We are in that wave two, and again the black average line which was pointing out, it is clearly respecting that there was a breakout. It is taking support at that breakout zone, and just marking those target zones. So equality would take us to 772, which again overlaps exactly with the stop, and 1.618 should take us all the way till 1000. So this is the levels we are talking about, and Motherson is our favorite of all. So why is this? Will take 2 minutes to explain this. Please bear with us because this is something interesting. So going back to the inception, right? So 1999 is when Motherson was listed. We did wave one, wave two. This was nice. Wave three, wave four, and this was a massive wave five. And then we corrected along with the small cap and the mid cap correction, which started in 2018 and continued till COVID period. And then started a fresh business cycle in Motherson with auto stocks rebounding. So the auto ancillaries are a proxy to the growth in automobile, and that is how we see the stock as of now. So this was wave one, and this was neat. Wave two, again going back to a shorter time frame here. It was nice wave one and wave two. We completed wave two here. We have started that massive wave three, and then we have done with wave one, wave two, and going with the wave three, right? Just again measuring the size of it. So we are talking about levels close to 300, and 1.618 should be 994. Let's not even discuss about this wave. Equality would take us to 342. That is 3x, almost 3x from the levels, where we are. So yeah, so this is what is the trajectory, right? So have that conviction on the stocks, and sit tight. Don't get panic when there is an 5% or your 4% correction. Wait for that larger uptrend to start, and that would only start when the index starts moving if there are any fundamental triggers, right? And yep. So then switching to Havels again, a nice bull run here. Then we corrected all the way till here. We started a wave one, wave two, and we are in wave three. Just measuring the size of it. So taking from bottom to top and placing it at wave two. So equality points us to 1783, and 1.618 is at 2200. we entered it close to 1500 levels, and now we are at 1676, close to that equality zone, right? So yeah, so this is how Havels would function. And then Sun TV is a very good setup. And during COVID, it did not do much because media sector was not at all attractive back then. But now we see a clear five-wave formation: wave one, wave two, three, four, and five, and a nice correction. Again, the black line supporting it on the top. It was taking resistance here, but it broke out beautifully, and we are seeing MACD cycle also turn up. So measuring the size of the outcome, equality is 1000 and 1.618 is 1578, right? And even the valuations are good currently for Sun TV. So that is why, we mentioned about this particular stock. And then discussing about Iris. Yeah, forgot to write about this, but Iris has been on a massive uptrend and currently trading at levels close to, 190. And we entered at 135. So that is almost close to 35 to 40% return in last 3 4 days. So that is how these micro caps function, right? So as we written, this was a nice cup and handle, and whenever the breakout happens, the stock generally grows out exponentially. And even MACD, we see a nice breakout here. So this was a wave one and wave two, and if we just measure the size of it, equality to 45, 1.618 is 411, but I think this would do way more than that, given that it's a micro cap. There are all triggers which are required for this to do well. And finally, talking about Sriji Trans Logistics, right? So you see here, this was wave one, wave two, wave three, wave four, and a nice wave five, and we started the consolidation. So what happens in these micro caps is that they take time. So for the momentum to kick in, it requires some or the other trigger. I think the Q4 earnings would be that trigger. It should definitely do well in this quarter, and from here it should go on the upside, right? Even the MACD is pointing out towards that. There should be a breakout here, and from here, it should do well. And what are the levels which we are talking about, right? So if I let's measure the size of it, so the equality is 564. Uh, just even if we do zero point 0.5 or 0.618, we're talking somewhere close to 150. That is 5x from here, and the stop loss we mentioned is 25. So you're sacrificing 5 rupees for this massive upside. So this is how you have to think, right? So always think about the odds. So how much are you risking and what is the upside? If you're satisfied with it and if your economics work, that is when you need to invest, right? And these are microcap stocks, as mentioned, I guess 2 days back in one of the beginner post, that microcaps tend to die after 5 years because their business models are not validated. They're in their nascent stages, and but these are the stocks which help you to create the generational wealth. If you invest in some stock where the market capitalization is 500 crores, and let's say if it goes all the way till 50,000 crores, so, that is when you make that 100x or 1000x, right? So yeah, so this is how you assess the market cycle and structure. So this is one of the study. This is not solely what we do to identify stocks. There is much more which goes in the background before we suggest something. But yeah, thought to just put it in a video and explain you just to make you understand how it functions, and people who have a bit of understanding of technicals can leverage this, and you try to find out those stocks which are having good setups, right? So that's all we have for today. And again, so this was a raw and filtered video. Pardon, if there is any audio or video quality. Uh, so put a thumbs up, and if you like like the video format, in future we'll try to come up with more such content. Till then, take care and thank you. Bye.